Hello, Oracles. Well, is this the beginning of our rally? What a heck of a day we had today. We went up, we started down, we had some ups and downs, and then we rallied into the close to end the month. And are we going to be rallying for longer? Now, we had discussed a couple of weeks back that, Dan Ives had mentioned that we're looking at a potential 2-week rally with the tech earnings coming through and then running for a couple of weeks after that. My dad informed me today that on the news they were discussing, this is the potential start of a 3-month rally. So whether it's 2 weeks or 3 months, I think all of us can agree that a rally right now and at least a green turnaround would be extremely nice compared to the red that we've been beaten down with for the last month. And now, so a lot of this red that we have seen recently obviously is a lot of the macro environment when it has to do with the rates going up. And it seems like right now the market has priced in 5 to 7 rate hikes over the rest of this year. Now, this coincides with some inside news that I had heard that the Fed is going to be extremely hawkish to start off the year, as we have seen, talking about many rate hikes. And then as the year progresses, we will see inflation inflect downward, and then the Fed will become more dovish, and we will have less interest rate hikes, which in turn would create a rally in the stock market. So now, whether this is actually what is going to play out or not, time will tell, but for right now, it seems like this is how it is currently playing out. Again, we won't know until Monday to see if we will actually continue this rally that we started today, but it seems like we are very well set up for that. Many stocks, the entire market is in the oversold territory, well under the 30 RSI for almost everything. So now it's that time for us to make this turnaround. Will it be fast? Will it be slow? Again, only time will tell on that. So now this is the point where you take a step back and say, how do you want to play this potential news going forward? Well, if you are a risk taker and you truly believe that this could be the beginning of a 2-week to 3-month rally, this would be the time you may want to go all in. Now, we talk about going all in, and for me, this is an uncertain territory still. I do not know, so I'm not, but ironically, because of the way I dabble in dips, is, with my $15 here and there with Tesla, and then when I add more to all of my other stocks as we dip down, today, ironically, was the very bottom threshold for where I like to be in cash, which is at 3%. So ironically, if this truly is the bottom and we're starting to turn around today, that, for me, just happened to be ironically perfect timing. Because now, if we do start this rally and we come back, I will begin to build up my cash reserves. I still invest in Tesla every single day regardless. I still invest in Nvidia and Amazon and a couple other plays every single day, but I won't be buying any dips because we won't have any. And this will allow me to build my cash reserves back up for the next dip. And there will be another dip. We still do have rate hikes going up, most likely in March. And when we get there and that actually happens, regardless of how much they're priced in, we will still have probably some selling off at that point. And so if you do choose to go all in, I would recommend, I'm not a financial advisor, but pick the good plays that you have, your high conviction stocks, the good plays, because those are the ones that are going to come out fastest and strongest. For me, Tesla, Apple, Amazon, these are some great ones. Some of the NASDAQ plays are down 50% from their all-time highs. So again, these are the high growth stocks, which is why they took such a beating over this last month. So while they have an opportunity to come back a lot, we are still going into an environment where the interest rates are going up. So their valuation compression may still stay down. So be cautious with some of the riskier plays there. But like the Apples and the Amazons and the Teslas, those are ones that should do well coming out of this in the rally. And so for me, I'm more of a conservative player, which is why I dabble in the dips and I just put a little bit here and there as we come down. And so, as I said, ironically, I was at the bottom threshold of my cash, and so I will continue to do my play and build my cash reserves up. I'm not much of an all-in kind of guy. I play it safe and dollar cost average for long-term investing. And so something we can learn from observation, what we've seen over the last month, is the market will always play worst case scenarios when there comes bad news. So the market was expecting 5 to 7 interest rate hikes, so they priced it in and they brought the entire market down to that point where we would be at if we were at 5 to 7 rate hikes. Now it does go in the other direction as well. We do have the positive euphoria that comes out. And when the market goes bull and goes extremely euphoric, that can be just as dangerous because the market is pricing in unlimited growth, which is just great for everyone. And that's where a lot of people get stuck holding the bag. So when we go in both directions and we start to kind of run a little bit past where we should be, that's where you start to look at, say, all right, if we're running really high over the next couple of months, it's probably time for you to maybe put on the brakes for yourself. And for me, if we get to that point where we're running a little bit higher, that's where I'll take my opportunity to sell out of some of my lower conviction stocks and get myself some more cash reserves for the next dip when it comes around so that I can invest more into my higher conviction stocks. And then as the market comes down and we hit that point of oversold, and we hit that point where it's like, you know what? I think the market's over-exaggerating where we're going to be in the future. That would be the time to start buying back in. And so we will always see the market go in cycles. It's always going to go up and down and up and down. And nobody can time the market, which is why always dollar cost averaging is the wisest way to go. However, when you see these things and they really get exaggerated like they have been, you can't time a bottom, but you can kind of see, hey, you know what? We've been beaten down for really long. I don't know how much lower we can go. So, it may not be a time to go all in, but it's definitely time to buy. When we're this far beaten down, if you're not comfortable going all in and you're not a big gambler, you're not a high risk taker, it's definitely a good opportunity to buy. Because, you eventually have to come back up. Always does. And in the long run, it will always go higher than where you were before. Sometimes you may just have to wait a decade like we saw from the dot-com bubble. And so again, we can definitely go down more next week. But from right now, from what I see, I am seeing, it looks like we are definitely going to be seeing a little more green for at least a little while to pull us up, kind of see which ones are the winners. And this is, again, these are the ones to pay attention to. So see which stocks come out of this the fastest and the strongest, because those are the ones when we hit the next dip are the ones you're really going to want to buy into, because coming out of the next dip, it will be the same ones. And it's usually the same ones that are going to cycle up and down and up and down. So, the market's basically telling you what to be in if you want to make the most money. Then you've got your gamble plays of high risk. Those are out of my league. Sometimes you may want to jump into something that's like, maybe a high euphoria, high momentum play. And if you do, just make sure you know it's a momentum play and you take your profits and get out. And so for me, on this whole dip all the way down to where we are, I added to a lot of positions. Some were a little sooner than, anywhere near the bottom. Like I added Square or Block, SQ, at 135. We bottomed out around 101 or 102. I was still way below my dollar cost average, so I was fine with that. Tesla I added a lot to, which I was super excited about. Palantir I added a lot to, added to Nvidia, added to Amazon. So I added to a lot of these different plays that I liked. I added to QYLD as my dividend play because going forward I don't know where we're going to be at with the interest rates going up, so I like to have the dividend play just in case. But for me, it works out great because I have enough to be able to swing that money into other stocks if I want. And so that is one of my cash reserve plays. And so again, I don't know if we truly are going to be starting this rally that people are talking about, but I would sure love it, and I'm sure many of you would love it as well. So I would love to see this thing going green next week. I don't know if it's going to happen, but we shall see. Let me know your thoughts in the comments. Do you think we are about to start a rally and today was the first day of that? Or do you think this is going to be yet another bull trap where we get the rug pulled out from underneath us and we come crumbling down even further? So let me know in the comments what you think. Thank you all so much for being here. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my trades daily. Otherwise, I will see you guys later. Have a great one.